Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Snehi Shah. And this is a show where we take you through all the stocks that are in focus today, either on the back of news flow or in the back of technical charts. But first up, let's take stock of how the markets are shaping up. Snehi, another very blah day of markets, if you will. In fact, we are very, very range bound for the third consecutive session, so nothing much coming in, even though there's a bit of a sigh of relief coming in the broader market since yesterday, if you will.
Yes, absolutely. Blah is the word that I would use to describe the markets as well. And range bound is what we have seen on our index today, because Nifty continues to be around that 22,890, 900 levels. It's facing some resistance, even crossing that 900 level. So 23,000 seems a little tricky right now. A 0.2% cut coming in on the Nifty. Sensex also 3/10 lower. India VIX is something that's looking fabulous today, because you have a 3.5% cut coming in there on that front. Below 15 now, so India VIX looking very good. Nifty Bank lower by 0.6%, but like Ankita mentioned, it's the broader markets that are doing all the heavy lifting today. Nifty mid cap is up 0.7%. Nifty small cap outperforming the entire market, up almost 1% in trade today. Very quickly, sectorally, metals continue to shine. Biggest gainer today, followed by energy, PSU banks, auto. On the flip side, Nifty Bank, pharma, IT, FMCG continue to be in the red, but that's what the market construct is looking like today.
All right, so that's how the market is shaping up for now. But let's get in. Ashish Kyal is the founder and CEO of Wave Strategy Advisors on the technicals. And from our research team, we are joined by Gaurav. Hi, good afternoon to both of you. Thank you so much for joining us. Let's get started with all the stocks that are in focus today. First up is Chambal Fertilizers. Ashish, that's your pick. Chambal Fertilizers, tell us, what are you seeing on the charts for this one? The entire fertilizer and chemical basket, we're seeing that, there could be some sort of a re-rating that could happen in this sector. Tell us, what do you see on the charts for this one? In the last 1 month itself, it's given good 10% move.
Yes. Afternoon to you and all the viewers. If you look at Chambal Fertilizer, the stock was consolidating since last June onward in a very broad range, and it has started showing some positive traction now. So there is a possibility that we can see a very strong breakout in the stock from these current levels, and if it manages to sustain above that 550 mark, which is it right now, I think it was going to be headed towards 590, and one can even create long positions from a medium to long term perspective. So 590 is the immediate target over short term, and on the downside, one can maintain a stop loss for the stock at around 530 levels.
All right, so that's Chambal Fertilizers on the charts. But moving on to a stock that's in focus today on the back of a brokerage note, and that's Bharti Airtel, which is on the back of a CLSA note, and CLSA is maintaining a buy call on Bharti Airtel with the target price of 1,890 rupees per share. And I feel that that's the top telecom sector pick as far as CLSA is concerned, and the growing arc for Bharti Airtel, which is growing at 21%. It's high, 21% higher in quarter 3 of FY25 versus Reliance Jio, and 14% higher in quarter 3 of FY24. So it augurs better than Reliance Jio according to CLSA, and they also expect 15 to 18% Indian mobile revenue EBITDA CAGR over FY24 to FY27. The stock is currently trading at 10x FY26 EV EBITDA, and on the back of that, CLSA is maintaining a buy call on Bharti Airtel. But nonetheless, given up all those morning gains, it's trading at the lowest point of the day with cuts of 0.6%.
Absolutely not looking very good in trade today is Bharti Airtel. Of course, a few days ago we've had the parent block deal coming in, a couple of buyers as well, so that's also been surrounding the stock over the couple of days, and that stock has been range bound ever since. But nonetheless, let's move on. Then Ashish, coming to you, picked out Zomato for us on the charts. It's an interesting pick because this is it's a street favorite stock, if you could call it that. Last 1 month, last 6 months, it's been under some pressure, but last 1 year, it's given very decent returns for its investors. So what's the outlook going ahead?
Yes, if you look at Zomato, I think practically everyone manages to talk about it, given that it has a lot of volatility, a lot of movement. And for that, there is a possibility if you enter at the right time, you are able to make some money out of it. So right now, Zomato corrected from 300 levels to around 210 on the downside, formed a double bottom kind of a pattern, and is showing a positive reversal. It also managed to break back above its 20 days average after nearly a month. And so there is a possibility that the overall trend might be reversing back on the upside for Zomato. We can expect a move towards the level of around 260 over near term, and on the downside, one can maintain a support at around 220 levels.
Okay, so that's the outlook on Zomato. Let's move on and talk about NHPC. It's a high flyer in today's trading session. You have a note coming in from CLSA, very bullish note coming in, wherein they've upgraded the stock to a high conviction outperform from an outperform rating. A target price at 117 from 120 earlier. There's a 3 rupee cut coming in, but it's the rating that matters. It's a high conviction outperform from an earlier outperform. So they were bullish earlier as well, but now they're reiterating once again how bullish they are on the stock. They also believe the stock could double in the next 4 years, and 25% of the stock correction in the last 6 months gives investors an inexpensive opportunity to accumulate. That's what CLSA is penciling in for NHPC. They also believe that the start of the Parbati 2 hydro project is boosting regulated equity 27% in quarter 1, and its entry into shorter duration regulated pump storage is also something to watch out for. It's likely doubled in regulated equity over FY24 to 28 as large projects have reached fruition to drive its EPS. So that is something that's positive that CLSA is flagging off for NHPC. Upgraded to a high conviction outperform, target price at 117 rupees per share. That stock is up by more than 5.5% in trade.
All right, high conviction upgrade coming in on NHPC. But moving on, Ashish, you have also picked out NHPC on the charts for this one. Now a big brokerage thumbs up coming in on NHPC. But on the charts, how does it look like to you?
Yes, indeed. If you look at NHPC, I mean, the stock has shown a very sharp rebound in today's session. There is a very important support level at around 71. It formed a triple bottom pattern from there and reversed back on the upside with a good volumes that are picking up in today's session. So it looks like giving a positive reversal. We can expect the stock towards to reach towards the level of around 88, and on the downside one can maintain a stop loss of around 75 from here on.
Okay, those are the levels to watch out for NHPC on the technicals. That's the take coming in from Ashish. Gaurav, coming to you now, you've picked out ITC on the back of a news flow that we've been hearing since morning. Now that stock is not holding up very well. Tell us what's ailing the stock today.
Well, yes. Tobacco stocks are actually under pressure today. In fact, when we look at companies like ITC, we are seeing some kind of pressure in the stock price. And the reason being that as per news article, GST on cigarette and tobacco products may be raised to around 40% versus current level of around 28%. Now, these products already, when we look at the GST structure, these products already have cess and levies, which actually takes the total indirect taxes that we pay for these products to around 53%. But these taxes are still lower than what WHO has suggested at a rate of around 75%. So that is the reason why news articles believe that we may see some increase in the GST rate. On the other hand, when we look at some of the earlier announcements, we've already seen that earlier in December, group of ministers already had recommended a special GST rate of around 35% on sins good like aerated beverages, cigarettes and tobaccos. But again, we did not see any kind of action happening there. But again, this entire discussion is taking its neck out. When we look at ITC, around 44% of its revenue come from the cigarette business, and it also have around 58% EBIT margin. So a very huge chunk of ITC comes from the cigarette business, and because there are some talks which are going on increasing GST on these counters, we are seeing some pressure on the likes of ITC in a day-to-day.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you some more buzzes and trades. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing in trade, either on the back of news flow or on the back of technicals. Well, let's resume then. First up, Bajaj Finance. That stock is in focus today on the back of a brokerage note by UBS. Now, they are maintaining the sell on the counter, and they feel the target price for it is 6,800 rupees from an earlier 6,500 rupees. Now, they remain cautious on the company. They feel that the incremental unsecured writing for NBFC has been inferior. The margin in ROA is likely to keep falling structurally, and they expect credit cost to remain cyclically high, and too much optimism is already baked into the consensus EPS, and therefore they're maintaining their sell call on Bajaj Finance. And on the back of that, Bajaj Finance is in focus today, trading with cuts of 0.3%.
Okay, so negative note coming in, and also not looking very good for Bajaj Finance right now. But nonetheless, Ashish, let's move on. Castrol India is a stock that you've picked out. A lot of analysts have been recently started talking about this stock because has it turned attractive on the charts? Because last 1 year, absolutely flat returns. Last 6 months, negative returns. But we have seen some recovery in the last 1 month. So what's his outlook going ahead? Do you believe this recent recovery will sustain on the charts?
Yes, if you look at Castrol India, I think the stock formed a low at 165. From there, it showed a move above the level of 200 and is managing to sustain there. And after a few days of consolidation, it is now resuming the trend again on the upside. So the overall tone is buy on dips for Castrol India. We can expect the stock to reach towards the level of around 240 on the upside. And on the downside, one can maintain a stop loss of 200 levels.
All right, this Castrol India on the charts. But coming to you, Gaurav, Tata Power is that what you picked out for us. Again, a brokerage candidate. Tell us what does the brokerage note say and what are the moves coming in on Tata Power?
Well, yes, a positive note coming up for Tata Power because now HSBC has upgraded the rating to hold and also hiked the target price to 345 rupees. What they're saying is that the execution is improving and that is the reason why they are being a little optimistic about this company. What they're saying is that the company is doing well on module and cell manufacturing. Even in terms of EPC turnaround, we are seeing some good results coming up from the company. But on the other hand, renewable commissioning is something that company needs to work upon. On the other hand, when we talk about the stock performance in the last 1 year, we have seen the stock has actually corrected a little. And the reason what they have highlighted is that weak power demand, pace of both PPA and discom privatization and project execution is something which is impacting the stock price. And from here on also, they do not see any kind of material positive catalyst. And that is the reason why they have upgraded to hold. But at the same time, they have increased their EPS estimates almost by 9 to 13% for the next 2 years for the company. As a result, when we look at stock performance, it is up more than 3% in a day today. So definitely watching out on Tata Power on the back of the positive note coming up from HSBC.
Okay, so positive is the note, and the stock is also seeing that impact 3% higher, slightly more than 3% gain coming in on that stock right now. Moving on, Ashish, Indigo is the stock you've picked out for us. Interglobe looking good on the charts. Last 1 year, good set of returns, and it's been consistently giving returns over the last 6 months, 1 month. What's the outlook going ahead on the chart?
See, if you look at Indigo, we can really see that the stock has managed to show a positive crossover on the moving averages, and also it is showing a positive pattern formation, possibly a triangle breakout, which can be seen today. And the pattern target on the upside comes to around 4,900 levels. So overall undertone for Indigo remains bullish for 4,900 as the target. And on the downside, one can maintain a stop loss, which is going to be around 4,340 levels.
Okay, so that's the outlook on Indigo. Let's move on and talk about IGL, Indraprastha Gas, a stock that's in focus today and has been doing very well over the course of the day. That stock is higher by 5% as we speak on the back of a positive note coming in from Jefferies, wherein they've maintained a buy rating, target price of 352 rupees, which is significantly higher from where the stock is right now. They see a favorable risk reward and potential price hike with a trigger, and they're also seeing that the 2 rupee per kg price hike that they've taken is enough to protect margins going ahead. They've tied up with long-term LNG contracts, and these are attractively priced off the Henry Hub, and the company has stated plans to bid for gas from ONGC as well, so that's looking good. Margin defense is expected and supportive of volume growth, and new growth opportunities from end of marketing exclusivity is also something that they're liking for IGL. So positive note from Jefferies on IGL, that stock higher by more than 5% in today's trade.
All right, that's IGL. But coming to you, Ashish, then you've picked out Avanti Feeds for us. Tell us, how does that look to you on the charts? I mean, if I look at the charts for Avanti Feeds, today it's given us like good moves of 2% odd. Even in the last 1 odd month, it has moved up 7%. So is this like will the positive momentum continue for Avanti Feeds from here on?
Yes, indeed, because if you look at last 1 month of performance from the mid-cap space or small cap, it has been disaster where we have seen very sharp cuts across the stocks in the mid-cap and small-cap space. But Avanti Feed has bucked the trend and shows a relatively outperformance. If you look at a ratio chart, that indicates that there is some inherent strength in the stock and it can manage to continue to rise up. So overall tone for Avanti Feeds is positive. We can expect a move towards the level of 800 and on the downside, the support for the stock is around 660 levels.
Okay, so that's the take on Avanti Feed. Gaurav, coming to you, Petronet LNG also in focus on the back of a brokerage note, and it's been doing rather well. Tell us what the note entails.
Well, yes, yet another candidate on the radar of brokerages, because here also JP Morgan is being a little bullish on the stock. They have maintained their overweight rating and a target price of 377 rupees. What they're saying is that the street is already factoring in no volume growth and at the same time 15% cut in its Dahej tariffs by March. But even if we consider that, what they're saying is that the company has strong valuation and that is the reason why they are being bullish on the stocks. What they're saying is that company is going to start their new 5 million ton per annum capacity in Dahej hedge, which can actually add up to the EBITDA in FY25 and at the same FY26, my apologies. And at the same time, what they're saying is that the summer demand for power should actually support the LNG imports, and that is the reason why they are being bullish on the stock. Lastly, what they're saying is that completion of tariff renegotiation with the companies can remove overhang, and that is the reason if we look at the stock performance also, it is reacting to this positive note. It is up more than 2.5%. So definitely watching out on this stock on the back of the brokerage note coming up from JP Morgan.
All right, with that, we're completely timed out on this edition of Market Fatafat. Gaurav and Ashish, thank you so much for taking the time out and joining us. Snehi and I will take your leave for this edition of Market Fatafat. Thank you so much for tuning in.